Bitcoin broke into a brand new all-time high yesterday, coming in at $69,990 on the USDT pairing. It came very close to that $70,000 round number that so many people have been talking about. In today's video, we are jumping into the technical analysis on Bitcoin, where I'll be sharing my thoughts and opinions on what I think is likely to happen next. Let's roll that intro and get right down into it. Hi guys, welcome back to another video update. Today we are of course talking about Bitcoin. We have it paired up with USDT on the 4-hour Binance chart here, and kind of following on from yesterday's video where we're talking about how we were coiling up into this little apex region just here, and we're either going to see a breakout to the upside or a break to the downside from here. I said highly likely. I thought it was more likely that we were going to see a move to the downside, but we wouldn't rule out a move to the upside, and we would trade the breakout should we see that occur. And one of the criterias for this was that we were looking for, and I'm going to just move this trend line up here a little bit. One of the criterias for our trade was a closed position above that key area of $69,000. Okay, or more specifically, we could have got a closed above this area of 67,641. This would have been a good place to kind of go for something, but we would have put a long position right in here, and we would have targeted out that higher range with a stop loss down here on the lower trend line. This would have failed because we would have hit the stop loss as we got rejected on 69,990, and we would have got stopped out as we came down lower, and we actually did wick down as low as $66,082. Basically, a lot of liquidity was grabbed here. We had a 5.58% dump in Bitcoin's price as we hit that area on the high side. So it would have been a failure to kind of try to go in for the long position with that closed position just there. We would have been able to have taken profits at 69,990, but you know, ultimately it wouldn't have been a great risk reward ratio, and it would not have been a great trade. Let me show you what that would have looked like had we done something like that. It would have been about a 2.24 to be fair, so it could have been something that many people were able to kind of take profit on, but it still would have left many people getting liquidated. And of course, that is kind of what this market has been doing for the most part for quite some time. It's been liquidating a lot of individuals out of the space, both longs and shorts. We saw a lot of short positions getting liquidated as we hit 69,990, and then we saw an absolute fuck ton of long positions also getting liquidated as we went down to $66,082. Ultimately, this is a market maker's wet dream as we see continuation of these liquidation events. We see a lot of money and a lot of liquidity being extracted out of the market, and ultimately only the Bitcoin spot ETF really trying to prop up the market at the moment. Now, where does this leave us with price action? Well, it's actually still very inconclusive. You can see the last 3 candles that we have here on the chart on this 4-hour time frame are showing us with a very indecisive market. Not a lot of buying, not a lot of selling. In fact, if I go through on the VPVR here, this basically shows you the volume profiles. Let me just zoom this out so we can actually see the scale of this thing. Give it a second to load. You can see that there's very little volume up in this higher range, and the majority of the volume that has been traded upon is actually down here coming in at $51,000. You can see there's a little bit of volume over here as well coming in at 62,000, but where we find ourselves at the moment at 67, there's a little bit more, but anything above that is really, really minor. This shows you that there isn't really a lot of interest in price action at that higher range of around 69,000. There's not a lot of right here either, around that kind of 65 down to 63. And you can see that there's really nothing in this little range just here, basically coming in at 60,000 all the way down to 52,000. So if we were to see a bit of a dump in Bitcoin's price action and we were to kind of come down towards 60K, you know that there's not really a lot of demand in this lower range here. And the next kind of real key area is going to be down here at 52K. So you want to be aware that the volume profiles of the volume that is kind of being transacted upon it's showing us with really not a lot to be confident about. Now, obviously, with the VPVR, we obviously the volume profiles, we have to kind of take into consideration the Bitcoin spot ETFs, which more direct through Coinbase and Coinbase custody. Those are fueling the significant surge to the upside outside of Binance's spot volumes. So obviously taking a look at Binance as an individual exchange is one thing, but taking a look at the entire crypto market is something entirely different. So we want to be aware that the Bitcoin spot ETFs are still soaking up more supply than Bitcoin is producing, or the miners are producing. And this is a bit of a problem for the bears, because essentially this is just going to keep fueling the moves to the upside. I do believe, though, that the bears will eventually get their glory days once we actually see the stock market have a correction, because Bitcoin now is a stock market play. It's not a crypto play anymore. Ultimately, the stock market is in control of Bitcoin's fate. And if the stock market does have a correction, which I do think the stock market is likely to do so in the coming months, it might not happen for a while yet, but when it does, I do expect Bitcoin to be heavily correlated to that correction, and a big major move for Bitcoin to the downside will come. But the question becomes, how high is Bitcoin's price going to go before we actually get there? Now, taking a look at our most recent targets and considering yesterday's breakout, I do believe that we are likely to see $71,500 to $76,000. Okay, that could play out over the next week or so, could be 2 weeks, could be a month. I don't know how to time the market. What we do know, though, is this is now the next likelihood, or the next likely scenario that we are going to see unfold. Now, as we stay above the 200 EMA and the 50 EMA, 50 SMA, of which, guys, I changed the color of the 50 EMA to a blue line. This is because since my eye surgery, the color red's been a bit difficult for me to read numbers, so I'm just changing that to blue. I did change the candlesticks, but I thought that might be a bit too much of a change for the videos, so I left those as red for now. And as it stands, we do have the 50 EMA here at $64,800 and the yellow line being for $65,000. The 200 EMA, though, is all the way down here at 56, and with price being above all of those, we have to remain bullish, okay, until we have a good enough, strong enough reason and a breakdown that's maybe potentially lower than the 200 EMA, we should remain bullish on that chart. Now, taking a look at the stochastic RSI, it does show us with moves for corrections. So over the weekend, personally, I would expect nothing but sideways ranging market. Wouldn't be expecting the market to pop to the upside or break to the downside. Just kind of get stuck in a really boring sideways ranging market is what I think we're likely to spend the majority of today into tomorrow. Tomorrow we might experience more volatility for a weekly close. Now, if we take off the stochastic RSIs, throw on the divergence indicator, you can of course see that we had the bearish divergence on the 4-hour time frame flag here. But if I bring this down to our 1-hour time frame here, you can, of course, see that we ended up with this bullish divergence just before we got this break to the upside. If we were trading the divergences, this one would have been a fantastic one to see. We also most recently have got this hidden bullish divergence right in here as well, and we're starting to see a bit of a lift on the 1-hour time frame. This could be an indication that we're likely to test out the 69K double top once again. Now, if I take that off and throw on our hourly stocks, here we can see we've got plenty of room to the upside as well, so we're not too concerned there. Volume profiles have been dropping down quite significantly here, showing us that there isn't really an appetite for selling, so we might start to see a bit of a reversal here. But again, the weekends are typically slow, so again, I wouldn't be expecting terribly too much from that point of view. On the 4-hour time frame, you can see as well that basically price moved up higher with a lower high on the volume. This is divergence on the larger time frames here. We have higher highs on price, lower highs on our volume profiles, but we know that the stock market and the Bitcoin spot ETF is really the only thing that is fueling it. Outside of that, this market should not have gone the way that it has done. So we have to take a look outside of the exchange specific charts if we want to kind of get a better idea as to kind of what is going on when it comes to BTC. So for the most part, I do personally think we're just going to get stuck in this range. We might bounce between kind of 66 and 69K for a while, and we might push up a little bit more. We might find that there is a little bit more resistance up just at around 69 to 70k, as you can kind of see in the charts. I think next week though we have a good strong chance at getting towards 71, but we'll kind of reflect on how everything is looking over the weekend and into Monday. Guys, that's going to wrap up today's video, but let me know what your thoughts are in the comments down below, and why don't you check out this video right here where JB is talking about BTC and its new all-time high.